Hi everyone. Last class we have seen the accounting equation asset equals liabilities plus capital, and we have seen the balance sheet also. So today we are going to see using of debit and credit, how we are using debit and credit. So here, when recording each transaction, the total amount debited must be equal to the total amount credited. Debit or credit indicates whether the transaction are to be recorded on the left side or right side of the account. The account looks like letter T, English alphabet letter T. The left side is called debit side. In the short form, we will write DR, capital letter D, small letter R, DR. And the right side is called credit side. Again, CR. The difference between two sides are called balance. Both sides will not be always equal. When there is a difference, that is called as balance. So now here you can see the T-shape account. Okay. So account title we will be writing. Left side it will be debit and right side it will be credit. So here, rules for debit and credit. For changes in assets and expenses or losses, how we will debit or how we will credit. So when there is an increase in assets and expenses or losses, we will debit. And when there is a decrease in assets and expenses or losses, we will be crediting. Next, for changes in capital and liabilities, revenue or gains, how we will be recording. When there is a decrease in liability, capital or income, we will be debiting. And when there is an increase in liability and capital income, we will be crediting. So this is just the theory part. You have to learn this one. Then only we will be able to apply the same in the problems. Okay. Now we are going to see how we are applying the rule for debit and credit. So you can see the first one. Example 1, Rohit started business with cash rupees 5 lakhs. So cash also there, that is also capital account. So how we will be recording that one? So we learned the rule, increase in assets or expenses, we will be debiting. So here cash is coming in. So we have to debit 5 lakh. Then next is capital, right? This cash 5 lakh is also capital. So capital, when capital increases, what we have to do? See, increase in liability capital, we have to credit. So in the capital account, see name of account, in the capital account we are crediting 5 lakhs. Okay. Next one is opened bank account with 4,80,000. So now you will understand this one, 4,80,000, that means our cash is decreasing, right? Cash is an asset. So asset is decreasing. So when there is a decrease in assets or expenses, we have to credit, right? So here in the cash account, we are crediting 4,80,000. So whatever we have done here, okay, debit, same thing we are writing here. We are not changing that one. And here we are crediting. Now bank account. So we are withdrawing, from the total 5 lakhs, we are depositing 4,80,000 into bank. So in the bank, it is, that is an asset. Bank account is an asset. Cash at bank is an asset. So there is an increase in asset. So we are debiting in bank account. Third one, bought furniture for rupees 60,000 and issued a check for the same. So furniture is an asset. Again, there is an increase in asset. So we are debiting 60,000 in furniture's account, and from bank 60,000 is going, right, because we have paid through check. So 60,000 is decreasing from bank. Bank is an asset. So when there is a decrease in assets, we are crediting. So 60,000 we are crediting. Fourth transaction, bought plant and machinery from Raj for rupees 1,25,000 and on advance of rupees 10,000 in cash is given. That means Furniture, plant and machinery from Raj. Plant and machinery is an asset worth rupees 1,25,000. So this asset is increasing, right? So we have to open a new account, plant and machinery. So here it is an asset account. So here we are debiting 1,25,000 because it is asset and it is increasing, right? Asset is coming. So we are debiting 1,25,000 and we are paying 10,000 in cash. That means cash is reducing. Cash is decreasing. So in the cash account, we are writing 10,000 in the credit side. Hope you're understanding this one. So all these balances previously we have written. 5 lakhs was the first amount. Then later we deposited in the bank 4,80,000. That this much amount is reduced. Now 10,000 we are paying as cash that we are crediting here. Next, one more account we have to prepare here. Why? Because we bought 1,25,000 worth rupees machinery, plant and machinery. But we paid only 10,000, right? The balance where we will be writing. We have to pay later, right? We have to pay later. So Raj will be a creditor for the company. So we have to open a new account, Raj account. Okay? He is a creditor. So creditor is always a liability to the company. So when credit increases or the liability increases, we have to credit. So new liability came. So we are crediting that amount 1,15,000. How we got this 1,15,000? 1,25,000 minus 10,000 what we paid in cash. So that we are writing here. Moving on to the next one. Goods purchased from Sumit Traders for rupees 55,000. Again here they didn't tell, they paid cash. So it is again a credit transaction. So here goods purchased, that means stock is coming inside. So stock means again it is an asset, stock is increasing. So here we are writing purchase account. In purchase account we are debiting 55,000, that is the stock coming in the company. Then again we didn't pay cash, right? So just goods purchased from Sumit. So Sumit, again it is a creditor to the company. We are crediting 55,000 because it is increasing. Sixth transaction. Goods costing rupees 25,000 sold to Rajani Enterprises for rupees 35. So you will be seeing the difference. Actual worth is 25,000 but we are selling it for 35,000. The difference you will understand. What is the difference? That difference is called profit. Okay. So first in the sales account, again it is not a cash sales. So in the sales account we are writing 35,000 on the credit side. Why it is on credit side? Because it is the goods we are reducing. Okay, from the company your stock is reducing. When there is a decrease in assets, we will be crediting. So on the credit side we are writing 35,000 and Rajani Enterprises we are debiting 35,000. Why? Because we didn't get money but we will be getting later, right? So Rajani Enterprise is a debtor to the company. That means debtors means you already learned the meaning who is a debtor. So Rajani will be paying the amount later. So Rajani Enterprises will be a debtor. That is an asset. Debtors are asset. So asset is increasing. So we are debiting that amount. Seventh transaction. Paid monthly store rent for rupees 2,500 in cash. That means rent is an expense, right? Rent is an expense. And when there is an increase in expense, we will be debiting. When there is a decrease in expense, we will be crediting. So when there is an increase, we have to debit. So 2,500 we are debiting. This 2,500 will be reducing from cash. And it has clearly mentioned paid monthly store rent in cash. So we have to deduct from cash. So again in the cash account all the other amounts are the same. Only we are adding 2,500 because asset is reducing. So we are crediting. Now eighth one, salary paid. Again salary is an expense. So when there is an increase in expense, we will be debiting. So 5,000 we are debiting. And again it is going from cash. We are writing here in the cash account. Debit side because asset is reducing. Ninth one, received check as full payment from Rajini Enterprises and deposited it same in the bank. Hope you remember the Rajini Enterprise where we bought goods and where we sold goods and we didn't get any amount. This is the one. Sixth one, goods costing rupees 25,000 sold to Rajini Enterprise for rupees 35,000. So Rajini Enterprise has to pay 35,000 to the company. So in the ninth transaction, we received check, full amount, that is 35,000. So we already written in Rajini Enterprises, okay? 35,000 we already written. Now we are writing in the credit side, okay? Because we received the amount. So we are writing on the credit side, and in the bank account, here we are depositing that check in the bank.